that set. So there's going to be 3 moving averages, and you can do the same. This is how I used to trade again all the time, and I think it's something that we can definitely play around with here on the small account. So we're going to have 3 simple moving averages. We're going to have an SMA, we're going to have another SMA, and we're going to have an EMA. So an exponential moving average and then 2 simple moving averages. We're going to have the 50-day SMA, the 180-day SMA, and then we're going to have the 15-day EMA. We're going to apply those. And again, this is going to be on a 4-hour time frame. And then what we would do is we'd go to our Trade Ideas swing filter here. Like first order yesterday that came through was EMR. I'd go ahead and pull up EMR. One other thing I want to add here is going to be the Daily Traders ADR calculator. We'll add the ADR calculator onto here. And as far as the ADR calculator goes, this is just going to help us set some targets. So again, this is how I used to trade, which again, I might introduce to the group as far as just trading the small account and swing trades go. What we want to do is we want to go to here. I don't know why it's not loading. There we go. You should see up on the top left, over the last 180 days, we can see the average daily range. We can see the 5-day projected move. So EMR, we saw yesterday that we had some EMR puts come through. If we look at EMR in the more immediate term, definitely a bullish trend coming off that low at $90 per share. But overall, it is kind of hard to identify the trend on some of these charts. Like EMR is a great example. I mean, we had highs at 134.85, lows at 90, came back off these lows. Definitely bullish since coming off these lows and breaking back above the 180-day SMA. So do I have a short bias on this chart? Not necessarily, right? Because we're trading above the 15-day EMA. We're trading above the other 2 MAs as well, the 180-day and the 50-day. And then what we do is we're going to look at the candlesticks. We're going to kind of reference where the candles are trading at in relation to the moving averages. We'll look at some support levels, some resistance levels. We'll set some levels again, and then we'll kind of see if that's a realistic target, running some projections using the ADR. And we could even on top of this go ahead and put on let's go here. Let's just apply the probability chart because I'm curious if we go to the probability chart and if we use it solely, let's see, we're going to change the length to 180 over the last 180 days. And I am going to flip here to a 1 minute really quick. And this is something that I could potentially even code, but we're seeing over the last 180 days, we're looking at a short bias. Okay, short bias over the last 180 days, which is definitely interesting. Yes, I think this will have to be adjusted a little bit to work with swing trading, but definitely something to keep in mind. That on a daily basis, you would have been better off, or not necessarily better off, but you would have just had a higher win rate overall. You would have been right more times, than you were wrong if we looked back over the last 180 days, and on a daily basis, we would have been shorting, which again, shorting, buying puts, shorting this stock. So there's a lot of kind of tools and information we can plug into a chart. I don't want to overwhelm anyone or put too much on here. But if we keep it simple with our 3 moving averages and we kind of look at where candles are trading in respect to those moving averages, that's definitely one way we could go about taking some swing trades for the small account. I haven't traded like this in over 8 months, but it's just something we can keep an eye on as well. All right, so let's pull up another order from yesterday. We're going to pull up ROST, and I'll give you guys like 5 examples. So if we pull up ROST, let's correct this bar. Sometimes Thinkorswim will do that. So when we look at ROST, what do I see here? I see a lot of chop. I don't see any clear direction, no clear trend. Obviously, coming off those lows at 122, we have moved. Let's see. We've moved about 25% to the upside, still sitting under highs. And we're sitting just about 4% off of those highs. Too choppy, really not clean, not clear. MAs are not respected. It's funny, I haven't used a lot of this language in a while, but definitely not seeing much on ROST. PSX, if we go to PSX, kind of same thing here, a lot of chop. I mean, just generally this year, the market's been pretty choppy, so it's hard to find charts that are going to look really clean and really clear. Similar story, and we'll probably see this amongst most of the charts we look at, are pretty strong lows with a really fast recovery. So low at 90, recovery up to 126. Shorting off of this level, there's just too much chop. It would be hard to identify where I would be wrong. It would be hard to identify also where I'd be right, because the MAs are at least the 50 and the 180 are trading so far below where we're currently trading, about 14% below. I just don't like that chart. That's interesting. 5 out of the 5 were all puts yesterday. So definitely a very bearish sentiment there as far as these swing trades go. ABT was our last one. We had 2 orders on ABT puts. ABT, if you see like gaps aftermarket, pre-market, I've talked about this. This is just going to be lack of volume. So just not a whole lot of volume going on. So not a lot of people trading during aftermarket or pre-market. That's typically what those gaps within the candles are going to represent. That's what that is going to mean, that there's just not many people trading. Kind of similar story again here. We're seeing a pretty choppy chart, no clear direction. And it is hard when you're looking at swing trading. Generally, you know, in the past, I've had more luck trading with the trend. And so when it's hard to identify the trend in the first place, it's harder to actually set up that trade plan, get your stop loss, get your take profit laid out. So again, the approach when it comes to swing trading and day trading, they're 2 totally different ways of kind of looking at charts and doing technical analysis, where you really have to have a specific system for each. And again, I'm kind of just taking accumulation of everything that I've learned, all the tools I've used, indicators, moving averages, custom scripts, kind of everything, using different time frames, a bit of everything, right? That I've learned over the last 9+ years trading, okay, to try to grow this small account. So just bear in mind, this isn't like a specific system, which I do have a specific system for the main trading that I am doing, okay? But yeah, I don't see out of those, I mean, it was 4 because we had 2 orders on ABT. Out of those 5 different orders that came through, or 4 different stocks that came through, when you look at those charts, there's just not a whole lot of information we can work with. It's just really hard to find the direction. There's just no clear area where I'd want to not just get in, but also get out for a win or a loss. So the cleaner and the clearer the chart, the better. That's kind of one of the main things that I always say, one of the rules that I have as far as the swing trading I used to do goes. Look for really clean, really clear charts where those moving averages are really respected. And that just means when you're looking at a chart, you want to see that 180-day, 50-day, or 15-day is actually acting as either a support or resistance, so it can go either way. If candles are trading on top of that moving average, that means that moving average is going to be acting as a support. If they're trading below that moving average, that means that moving average is going to be acting as a resistance. You don't want to see a chart where candles are trading straight on top of or through a moving average, because then you're not going to be able to set a stop loss or take profit based off of that, or really identify any trade plan.